Hello, everybody, and welcome back to Money Multiplier. I'm here with Bob Hayek, and again, this is part two of debt elimination. So, we're going to dive a little deeper into how all this works, how this can benefit you and your family. So, welcome back, Bob. I appreciate you coming back on.
No
How you
problem.
doing? Good. Hello, everybody, and welcome back to Money Multiplier. I have Bob Hayek here with us today, and we're talking about debt elimination. Hi, Bob.
How are you, Kim?
I'm good. How are you?
Wonderful.
Excellent. Great. Thank you so much for being on today. So, this is part two of our debt elimination discussion, and I have a couple more questions. I think we can dive deeper into some of these topics in regard to helping people get out of debt. So, my first question is, and I think this is really important, is why is this option great for people who are living with debt? Why is this, important for people to learn how this helps them?
Well, that is a problem in many ways because that is the number one cause of stress. It's a number one cause of divorce. It
Hmm.
causes a lot of pain in people's lives, and it's just them needing to be educated on how to deal with it and figure the proper ways to eliminate it.
Hmm.
Because once you do that, there's a few things that start to happen. One, you get to sleep better at night. And two, you're going to start to see your credit scores are going to change, your debt to income structure is going to change, and it's going to change for the positive. So every which way to Sunday, it makes sense to do it.
Okay, great. Yeah, no, it does, and I can tell you firsthand experience. I went through a long and horrible divorce, and put me in a situation where I needed to start my life over and start my financing over and all that. So we had to clear up debt and different situation that we had created while we were while I was married. So half of that debt belonged to me, right? So learning how to use this strategy, helped me out tremendously. I mean, I can't tell you, what a godsend this was to be able to say, like, help me get out of a situation where, it was extremely stressful, losing sleep at night, being a single parent again and, have two kids in college, support a household, right? And then, be able to sustain a lifestyle that, I wanted to live. So, we all fall into these situations where we create debt, right? I had a mortgage. I had three mortgages, actually. I had two rental properties and my primary residence. So, we had a lot of debt that we were dealing with. So, having this strategy that, you brought to the table, I mean, this was just an amazing opportunity for me to be able to utilize. And, now I sleep at night. I have less stress, right? I have more financial freedom. I've learned how to manage money where, why I even went into my business, why I started my business as Money Multiplier is showing people that, what, if you're financially responsible and you just take a few minutes to step back and say, okay, what am I doing? Where am I going? Where do I want to be in retirement, right? How do I want to live my life? So many people don't ask that question, right? They just go about their lives. They live for today and not worry about tomorrow. And I always use this analogy. And it's funny because I tell people, do you want to have a rich man mentality or do you want to have a poor man mentality? So I said, in a rich man mentality, if you give them $1,000, they're going to create 100,000, right? If I give a poor man $1,000, he comes back with an iPhone, right? And so many people live that mentality because they want that instant gratification, right? The instant satisfaction. But they don't worry about how they're going to pay for that $1,500 phone, right? When they're barely just paying their bills. So out come the credit cards. So, and I think by our conversation, I think what you're saying is that by doing this strategy, that's going to lower the amount of interest they're going to pay overall on their mortgage, on their credit card debt, on loans, their car loans. And I know, like, as soon as you pay something off, especially a mortgage, if you pay it off early, right, you're going to save all that interest. Now, maybe you can give us an example of, just say, someone who you paid their mortgage off and you were able to save them, thousands of dollars on their interest costs for that mortgage.
Yeah, I just did one for a couple where they got a couple businesses. They had just opened up their mortgage in July, um, and we will pay off all of their debt and the mortgage within 4 years. That's a
Wow.
30-year
That,
mortgage paid off in 4 years.
that's
Now,
crazy.
yeah, well, there's reasons in how we do that, but it's doable.
That's great. I mean, can you imagine? I know me and you worked on a case together, and I had a client who, and I can just use the example of one of my clients, that they had about $70,000 between credit card debt and two car loans, and then they owed about $336,000 on their mortgage, which they had just started 3 years ago. Um, so that $70,000 of debt, we were able to, right, get that paid off in about 5 years,
Hmm.
right? So they would be free of all that debt in 5 years. And then the mortgage will be paid off in 12 years, which is half
Right.
the time of where they are now. Uh,
Yep.
so, so doing that strategy with where they were, and this is what I wanted to touch base on, was that when people pay off their debt, you say, you have a credit card, you pay it off, right? Once it's paid off, that's it. You have nothing to show for it. But with this strategy, not only are you paying off your debt, but you're creating wealth at the same time. Maybe you can kind of talk to that a little
Exactly.
bit.
Yeah, basically what happens is what we do is we look for what we call inefficient dollars.
Okay.
Inefficient dollars are dollars that are being spent by the consumer not efficiently, in a sense that if they have a credit card and the minimum payment's $100, most people are going to pay $200 to $300 to pay that debt down, not realizing that it's just an hamster wheel. It's just going to keep happening. So what we do is we tell them continue to pay the minimum payment. We take anything over and above the minimum payment and we use that to fund the bank. So once the bank, which is the policy, has enough money in it, we borrow from the policy and we pay off that credit card, Visa, MasterCard, or Discover, whoever it is. Now that debt has now been satisfied, so that gives them it'll help their credit score, their debt to income ratio. That minimum payment that they were paying Visa, MasterCard, or Discover is now going to be turned around and brought into the policy to pay the loan internally in the policy. Because who would you rather pay, Visa, MasterCard, or Discover, or you? And when I tell that to the people, they go, I'd rather pay me. Well, that's what we're going to do. We're going to keep paying you. So every time a debt gets paid off, that money's coming back in the policy to pay the internal loan. So whatever they were paying out on a monthly basis now is inside that policy. So then when they're out of debt, not only are they out of debt, but now they have most of the money back in their bank. So if they want to go out and buy a car or do something, instead of using the traditional lending sense, they go borrow from the policy, pay for whatever they're buying, and then pay themselves back. And it just keeps on going, and you keep going in and out and in and out, and it's a beautiful thing.
So that goes back to the when we talk about being your own bank, right? That's your infinite banking. So,
That's infinite banking.
yep.
Exactly.
So that's where we're showing people, once all this debt is paid off and the mortgage is paid off, now you're going to have money within this plan that say, okay, maybe now I want to buy a second home, right? Maybe I want to, buy a new car and I need a down payment on something, right? So instead of going to a lender or going to a bank or borrowing it from a family member or whatever, wherever you would get that money from, now you have money in this policy that you can utilize to do that. And
Exactly.
now, again, this is the strategy of being your own bank. This infinite banking is such a great um strategy that I've heard of. I mean, this is something that is just so important for people to have. You know, I don't know about you guys, but read a lot on the news, and I listen to stories and about what's going on and how banks are collapsing and all these things are going on. And that what we're trying to do here is show our clients that, you know what, you can be your own lender, you can be your own bank and not have to worry about all that stuff. Right. So this is going to do a lot of different things for you. It's going to get rid of your debt. It's going to get rid of those high interest payments. You're going to have financial freedom. You're going to have cash flow. You're going to decrease the taxes. And that's the other thing too. A lot of, the taxes are going up as well. So many things that are increasing. This type of program is going to help people eliminate a lot of that. And then also the other thing too, and maybe you can talk about this, Bob, as well, is that because this is a life insurance plan, what are like the tax savings that you get by having this type of plan as opposed to a 401k or something like that? So I think, we all know in a life insurance plan, it's tax favored because it's one of those vehicles where you don't have to pay tax on it.
Well, because you're borrowing from yourself.
Mm-hmm.
So when money's growing in a life insurance policy, they're growing tax free. But more importantly, when they come out, they're coming out income tax free because we're borrowing from the policy. We're actually borrowing from the general portfolio of the company.
Right.
So in some instances where you might have, say, $100,000 in the policy and you borrow 25,000 to go buy a car, that wouldn't mean that you would have 75,000 left in the policy. Well, that's not always the case. In some cases, that policy could still have that 100,000, even though that 25 went out to buy the car. And now you're making interest internally on that policy, but you're also gaining the interest that you would have paid somebody else. And we didn't even talk about dividends. These policies pay dividends, but we don't usually talk about them because they're not guaranteed, because we don't know what the dividends are going to be until the end of the year. But it's all positive, positive, positive.
Yeah, but I mean, even if we don't know the dividend, that's still money that's you're getting, that is like free money
Absolutely.
almost, right? I
Yep.
hate to use that word free money, but it's free money, right? It's money that's coming into the plan.
Yep.
Yep, without you doing anything, just like you're getting dividends, getting put into the account, but maybe it's 10% one year, maybe it's 5%, but who cares? That's just extra money. That's like gravy on the mashed potatoes, right? That's just extra, right? That's just extra sauce. So maybe you can. I think the other topic I wanted to discuss about was to briefly explain the options that are available to our clients here. So meaning, if someone is interested in this type of program, are there different options they can choose from, or is it basically just one strategy and then you kind of just follow that format and that kind of works for everybody? I know that depending on the amount that they're able to invest into the plan will dictate how long it would take to get out of debt.
Correct. Yeah. I mean, there are options based on their financial situation. Give me an example. Sometimes what happens is I'll show a plan at a certain dollar amount, and the client will either say, that's good. Well, what if I gave you, say, $500 a month? I give you $1,000 a month. Now we're accelerating the program.
Right.
In that sense, that program maybe will go from maybe 9 years to 5 years. The key is whatever we start the program at is what the program will be. I can always lower the program. I can't raise it. So if we start the program at $500 a month and the person loves it and says, "Oh, I want to do $1,000 a month," can't do that. I'd have to start another program, because whatever monthly amount is coming in is what predicates that death benefit. And remember, we're not buying death benefit really for death benefit. We're buying it to maximize cash value. So we want to really try to hone in on a number that makes sense. And most of the time, we're there. We find a number that works.
And what I like so much about this is that we use money that they're already spending, right?
Yes.
So we're not stretching their budget anymore.
Right. Yeah. This is money, and I'll look at where they're spending the money. They might not be overpaying a lot on their credit cards, but they might be funding a 401k or an IRA at a high number. And that makes no sense, because if you're putting money into an IRA or a 401k, and you're making 10, 12%, you think you're making, but your mortgage is taking 30 and 40% interest every single month, and your credit cards are at 20 or 30%, you're not making any money. So you're better off taking those dollars, redirecting them into the bank, and let that pay it off. Once you're out of debt and you want to reinstitute that 401k savings or whatever, that's fine. But until you're out of debt, makes no sense.
Yeah, that's great. I mean, that was something that is extremely important, is that because people are gonna say, well, I can't really afford to do that because my budget's already stretched thin. But the key here is that we're finding those dollars to fund this plan, and you're not spending any more than you already are. And I think that's amazing.
Yep.
So Bob, thank you so much for joining us today. I appreciate you so much. And thank you everyone for joining Money Multiplier. And we'll see you next time. Have a great day, everyone.
Cancer, 16 rounds of chemotherapy, multiple surgeries, feeling alone, feeling isolated. Those are the things that I felt while I was going through cancer. Those are the things that someone is feeling today. One Tough Cookie is here to help.